There's a lot of changes happening in the home and auto industry, and we're going to go over some of the major pieces that are going to help you understand where these rates are going up and what these changes are happening. We're going to go over some companies that have had some major lawsuits, and we're going to go over some of the details of the pieces of this industry. So let's dive right in and just go over our first article. So starting off, we've got the industry as a whole. So what you're noticing is that when we look at these articles, these aren't necessarily false information, but companies are pulling back pretty heavily on the insurance industry. Essentially, what's happening if you're an independent agent or you work for a major company, you're noticing that these companies are backing out of states. Why is State Farm leaving Florida, or why is Farmers leaving Florida? Why is State Farm putting restrictions and putting non-new business into California? These are some major states and major problems, which we'll dive into some of the rates in a minute. But these are the things that we're noticing that are happening in the industry. So instead of just saying that, let's go in. Let's actually look at it. As of May 28th, State Farm has announced that they'll no longer be accepting new applications for home, auto, or commercial policies in California. June 26th, Nationwide began to non-renew the monoline policies, so the single auto policies on their current book. That's starting as soon as the end of September. State Farm claims have doubled since 2019 to 2022 from the last time they've reported. There's only about a third of a premium increase. So they've doubled the claims, but have only increased their rates by about a third. So there is likely more to come. 2022 was not just a one-time incident. It was actually the 8th year in a row that the entire U.S. suffered the loss of 10 catastrophes. So it's caused over $1 billion worth of losses, according to the American Property and Casualty Insurance Association. Meanwhile, the cost to build a home and the materials have climbed almost 33.9% since the pandemic. October 31st, Farmers is non-renewing home, auto, and umbrella policies they're exiting the state of Florida. Florida premiums have increased about 42% per year, and so you're starting to see kind of a trend. This isn't just Florida or California. Some of these things are happening in Michigan, where a lot of companies are pausing the business. Some of these have happened in Virginia and Ohio, and pretty much essentially the majority of the states are starting to see some sort of major increase or some sort of change. So what's really happening? Well, if you follow my channel, one of the popular trends is to know about this InsurTech piece, right? All of these new insurance companies that are coming out and they're doing all the cool things. Well, that's what we're going to talk about is the next company, which is Lemonade Insurance. Now, Lemonade Insurance is actually a company that has been known for being digital. They really headquarters out of New York, and they claim that they're not taking money in their model. So they're paying a different strategy. So they're really home, renters, and pet insurance is their focus, and they were adding auto this year. I don't believe I've even seen that they have. Well, this is once again their 5th year in business and their 5th year of losing money. Now they are actually trending up as they always have been, which is kind of a weird way to see in all of their quarterly meetings, but they are also raising the rates, and you're going to see some major changes coming. They essentially got approved recently for a 30% rate increase in California alone, 23% increase for their pets. So if you have pet insurance or you have home insurance with Lemonade, there's a good chance that your state is going to see some sort of a spike. They also have already or are non-renewing 2,000 homes and planning on cutting out more homes. So for those of you that have gotten into the company and you weren't really the right fit, they still wanted your business and they just took anyone in, well, they've gotten to the point where they can't afford to keep that risk on the books. Homes are the major piece in the states right now that is causing the most problems. The cost of inflation, the natural disasters, which is going to be our next topic, and all of these pieces are causing a huge loss. They actually netted a loss of $67.2 million in the second quarter of 2023. However, they did grow their customer base by almost 50%. So the question is, as we talked about last time we talked about Lemonade, is are they going to have another increase in customers but also more losses? Because it seems to be the trend that they always cut their losses down. So they're actually less losses this year by a few percent, if any, and they're less risky, but they gain their customer base by 50%. So by the time they get to the point where they can be profitable, will they have any money left? So one other thing you're going to see in the industry is this perfect storm. There are a lot of storms happening right now in the industry, and I just want to talk more frank with you guys and go a little bit more in depth on how that's actually affecting it. So let's give you some numbers. 2022 was, again, like we said, the 8th year that the US suffered 10 plus catastrophic claims that caused over $1 billion worth of losses. Now, that sounds like a large number, but companies plan on this. They do expect that. They run through the National Weather, whatever it's called, the National Society of Weather, but they basically go through and they plan on what the losses are expected to be. Although they didn't plan on inflation going as high and staying as long, yes, the lumber is what we think of. The cost of lumber went up, but it came back down. Why isn't the house price? Because the cost of the roofs never came down. The cost of the labor never came down. The cost to rebuild a house has increased pretty drastically, and these insurance companies are already behind the 8 ball or behind the ball with moving their rates to compete. Most states have a delay of several months that if you can get approved to have the rate match what they need to get to be profitable. So while that inflation is happening, the single family home has raised about 33.9%, causing that industry to have a $26.9 billion net underwriting loss. That was 2022, which is, by the way, 6 times the average of the year before. That's a big change. And these insurance companies, although we do think and see them denying claims and we feel like that's like the negative, and they do fight a lot of those, and they're really strict right now because of those reasons, because they literally just lost 5 times more money, 6 times more money than they did the previous year. So that is a very unexpected shakeup for this entire industry in just about every state there is. So here's the kicker. The forecast is actually coming up and it's not looking as good. So when we look at these articles about the forecast, there's currently 17 named storms. We just said the average is 10. So they're expecting 17, and the article even says 18 could be possible that are going to be major storms coming through. We're almost doubling the number of storms that we're going to see, and this is more on that coastal line. In the past 40 years, if you look at the long spectrum, there's been an average of about 14 storms. So not as big of an impact, but you got to remember, these insurance companies think ahead of time. So they're actually pushing out and thinking out till 2025 and planning on the profitability of if these storms stay at 17, then we're going to see another major loss. So some of these companies are actually over pushing it based on their projection model. Now, this is actually from the National Oceanic and Atmospheric Administration, the NOAA, but they're predicting 12 to 17 storms. Of those, 5 to 9 of them are going to be hurricanes, and 1 to 4 of them should be major hurricanes. So our top story is really about car insurance rates. This is probably why you clicked on the video, is why are these rates spiking? And we've seen an average of about 17% increase in the first half of 2023. And it's not stopping. We're expecting to see another 4% increase. If you look at our national average, we were about $1,400 to $1,500, and now we're pushing almost $1,700 per 6 months. So for the normal person, $3,500 a year is not uncommon going forward. This, once again, is these companies planning for 2025, just in case these natural disasters come through and everything upsets that plan. At the end of this, I will link another video that goes into depth a little bit further that talks about why the car industry is causing more, why it's more expensive to insure somebody in the car, because it's not just the actual car. It's the person, the medical, the risk, the location. There's a ton of factors that make up that price, and what they're seeing is the losses have been major. So personal auto, they're up 17%. The average annual cost of the policy is $240 more every 6 months. But if we dive a little further and we use Insurify's information here, they're actually claiming that over half of the people that are doing quotes now in 2023 compared to 2022 are actually not opting for full coverage. They're not asking for comprehensive and collision. So we're seeing a shift where people can't afford the insurance anymore. Even though the national average is 3 to 5% of your income, it's still showing where it's impacting families in a major way. Michigan is still the highest cost for car insurance. We're about $231 a month extra, and we're also seeing a 4 to 5% increase just pretty much across the board. Now, home insurance, different story. Most companies are probably going to have about a 10 to 15% increase because Michigan is having issues with their homes currently. By the way, if you are shopping for a new insurance company and you're seeing these rate increases, that doesn't mean everybody has done it. Honestly, the next best thing you can do is to try to find a company that's a good fit for you. Every person has a profile, and your location, your credit insurance score, your number of vehicles, everything that you do adds up to a profile. Each company is a different fit for the right profile. So if you're seeing these increases and you're not 100% sold on the company you're with, I'll put a link in the description below where you can shop with multiple companies that check that against those information that will check against that information and try to get you a company that's going to give you the best option. Once again, the link in the description below if you're looking to get a quote on home, auto, or any of these types of insurance that we're talking about. Naturally, as I probably just mentioned, is shopping for car insurance is really the only answer. I'll link another video at the end that goes over discounts that if you love your agent and you want to stay with them, great, you can go over that and try to get some more discounts, but it's probably not going to make as big of a difference as shopping. I actually agree with Insurify here where they said that really honestly is the answer. Granted, they've always been saying that because they get paid for the quotes and that's really their world, right? One of the things that we've seen in the industry is there's a lot of lawsuits happening. There's a lot of claims when the industry gets tight, as far as the US, when the economy gets tight, lawsuits happen. False claims, a lot of things happen, and everyone starts blaming each other because insurance is where the money is. That's always been that way. Usually life insurance, but now car insurance claims, home insurance, you can't afford to fix your roof. So we can't overlook that damage that you had before because it's just not in the budget. So you have to go after your insurance to try to get that covered. Well, there's a lot of issues and there's a lot of legalities, and you don't know if you do have the right coverage or not. This is a scenario where Liberty Mutual actually had to defend a major company that we made a video on previously, was Copart. Copart is a major company. They actually sell the cars when they're totaled. It's basically like a salvage yard that sells cars, and so they could sell them new, but 9 times out of 10, it's damaged or something's wrong with it. Sometimes good clean title, sometimes it's just a total wash, and the insurance company just said, get what you can get for it. Well, they got sued because the oils and the pieces of the cars and the water runoff and all of that were in this Copart, one of their multiple locations, actually went into some water streams and damaged another company. They got sued for that, and Copart wanted their insurance, Liberty Mutual, to help pay for that and defend them. Long story short, they lost the lawsuit, which isn't the article. The article is actually about Liberty Mutual trying to deny them to even defend them. And the word we're talking about is called indemnity or indemnify. That means to make you whole. That's just one piece of it. The other part is their right to defend. So when you get in a lawsuit with an insurance company, they're supposed to defend you in those cases. Well, Liberty Mutual is denying that part. Copart's saying that's fine, we understand, we lost the lawsuit for that, but we're saying that's not the only thing that we're covered for. We are covered for the indemnification of this claim that we just had. And they're being denied essentially because it was pollutants, and that's excluded specifically in the policy that says if there's pollutants and different wording, but that is something that's not covered. The part that they're fighting is the lawsuit that Copart lost was the pollutants such as water, sediment, and oil and soil on their land. So there actually is a possibility that Copart could actually claim that under their insurance policy. However, Liberty Mutual is saying no, because it has the pollutants mixed with it or whatever that scenario is, then we're not responsible. So now the question is it their duty to defend or their duty to indemnify them to make them whole again? This was sent back to the courts, and I'll tell you right now, in 2023, actually this was last year when this started happening, well, this year the courts actually said the claim is denied, not because it was rightfully claimed, but because they had already lost the right to defend lawsuit, and then they quickly switched it to the indemnify lawsuit. So they essentially said that no pollutants was premature. So they haven't even done the inspections, they haven't even checked the pollutants, they haven't even verified. So in that case, because they just went after that, it was a smart move, but it was too soon. It was something that was premature, and they really should have just kind of taken the court's ruling and then figured out the other pieces on the back end. We could see this pop back up in the news if they do try to go back to them, but I don't know if they can actually re-sue them and go back for that same scenario. So everyone thinks texting and driving is the most claimed claim in car insurance, and that's actually not true. The distracted driving, yes, actually makes up the majority of claims, and you're going to see that across the board. 4 to 5 accidents is distracted driving. But what a lot of people don't realize is distracted driving isn't what you think it is. Yes, are most people holding out their phone and most people driving while texting, driving while calling, playing with their new touchscreen, their new technology? Absolutely. But a lot of people don't realize that it's not just that. According to Compare Market, they actually did a chart here recently for Americans as well as non Americans, but they actually came back that 41% were weather condition related. Most of them, some of them were eating and drinking, some were dealing with children, others were reading text messages, which we think is the majority of it. Honestly, the majority is just weather. So most of the distractive, if you're distracted looking at the weather or doing things like that, that's common. 4 to 5 accidents in the US were distracted driving. 2 out of 5 were weather related. And according to the survey from Compare Market, 81% of American drivers have been in a car accident that involved a distracted driver. So when it comes to drivers finding distracted driving while on the road, 41% said it was weather related. And the most interesting article that we've read to this week is the actual weddings. What is most claimed in a wedding? And we'll just zoom right in here for you. So if you have a wedding, if it's beautiful, you're getting married, this is the greatest time of your life, congratulations. You have a long road ahead. Lots of car insurance and lots of home insurance in your future. Property damage was actually 19% at the largest claim for weddings. Weather problems was actually claimable at 16%. Illness or injury, 15%, and loss to damage or their attire was 9%. So if you're going to get married, make sure the weather is good and make sure no one parties and no one has a really good time and no property is damaged and it's perfect. I hope you guys like this new format. I was testing this out. I've always wanted to kind of do more of like a news of the week. It does take a long time to do this part and really fill all these pieces out. Obviously, there's some tweaking and some practice on my end that I need to get better at, but I will tell you, I spent the last 4 hours just putting this piece together, literally just making these little guys on my screen so that it actually made sense and was interesting. Let me know in the comments below what your guys' thoughts are. I'm Mark with Think Insurance. I'll see you in the next one.